Okay, so what is this session about, and what are we doing here? And let me start with that. I want to thank you that finding the time to be here. Once on a while, I love to make such meetings, because once in a while, the markets create some special opportunities. And I'm not talking, of course, in the short term. I'm not going to talk today about what we should do now, okay, buy or sell the euro. No, that's not the idea. I'm going to go over the market, about the general opportunities and how I see the market, where I believe it should be going and why. Also very important. And I'll share with you my trading plan in general. Of course, again, I'm not going to talk about the 15-minute charts and not 1 hour chart. That's not the idea. And definitely going to put on the table all the important opportunities we have. And it seems that the market took us to some place that many opportunities are building now. Okay, so I'm going to go over the chart, and everything is recorded. I will send you, after I will finish to upload everything and prepare the video, I will send you the recording and the link to the recording, of course. I will go over every pair, if it's commodity, if it's index, and I will stop after that for questions. And after I finish my list, I will have some time to go over your list. I'll try to cover as much as I can. If I'm not covering some pair, that's because I simply don't have any clear idea about it. Okay? But anyway, if you have anything in your mind that I will not cover, then please keep it to the end, and then we will go over that together. Let's begin. The first thing I would like to begin with will be the majors. And I will start with the pound dollar, which I believe is a really interesting pair these days. What happened with the pound on the last period? Carney, that used to be the chairman in the Central Bank of Canada, replaced Marvin King, and he now takes the control over second big, some will say third big economy in the world. Carney is known as someone who prefers, not always it is allowed, but someone who prefers to put some value into the currencies. That's what he did with the Canadian dollar, and that's what he is doing since taking this chair with the pound dollar. Now, there are few things to remember in general about the economy in England. They were very close to official recession. Official recession is when we get three negative three negative quarters with the growth. They had two, and one of them was positive, and a lot of breath just blew out from their mouths. It's like, whew, right? Since then, it looks like that the actions that Marvin King did before Carney joined the Central Bank of England started to show its fruits, right? The trees that he planted that started to show their fruits, and the economy started to grow a bit. If it's the retail sales, which have been improving not on a like a linear line, but definitely improved, and if it's the PMI, if it's the constructions, if it's the house prices, if it's the average earnings, etc., etc., many things improved in the England economy. Not as they would want, but definitely improving. And that took the pound dollar up, and now Carney is talking about the possibility just to stop with these quantitative easings they are doing by their own. He is against it. He prefers to let the economy run natural. What it means that most likely, unless there will be some surprises, pound dollar will continue higher. And there is one thing to remember. In our reality, when the interest rates are so low everywhere, no one can allow to have and to deal with too strong currency. It'll be kind of a suicide to the economy. Bernanke is trying to devalue as much as he could. Kuroda is trying to, in Japan, is trying to devalue as much as he could. Marvin King did the same. Draghi is doing the same. And Australia and New Zealand lately joined the celebration. But about New Zealand we'll talk about it later. So to make long story short, the pound dollar rise has a limit. There is some limit that even Carney, with all his bullish views about the currencies and the market, will there is some level, some ceiling that even he could not allow it to reach. From my point of view, this ceiling for the pound dollar is 168 approximately. Above this range, 168 it's the same like 166, and the same is like 170. Okay, it's a range, but this level is a dangerous level. Okay? Every time, and that's a fact, on the last 5 years since 2008, every time the pair reached such levels, the economy stepped back. And this is something they will try to avoid. So that's, from my point of view, a top a ceiling of the potential rise on the pound dollar. Now, technically, how can we enjoy from that? There is something to remember. First of all, on the negative side, the pound dollar is still, as you can see here, fighting this triangle. There was a monthly classical triangle that shows that the bears are here, especially with the break to the downside. It could turn to be a fake break to the downside, and this flag could be broken also to the upside. But we should remember this ceiling. I'm talking again about the 168 approximately. It could be a bit lower, it could be a bit higher. That's all same zone here. That's the middle. And that, from the monthly chart, the break of this triangle to the downside means that the pound has a natural bearish pressure. Of course, technically, okay, technical view. Now, not just the triangle is being retested, but also the monthly trend line on the RSI is being retested right now. So, according to the monthly chart, the bears are still here, at least as long as this triangle still holds and the break could retrace to the downside. What the weekly chart tells to us? The weekly chart is a bit confusing, because for watching on a really long view, we are inside a very big range. This range, that's exactly where the economy is moving. Okay? That's exactly the limits. 168 and the economy stepping back, 148 and the economy starts to recover. There is one thing to remember. We are inside the range, yes, but from this top to this bottom, we got few waves that took us to this level, and right here the pound created a double bottom. Now, watching back, I did not believe this double bottom will hold, but it did. Now it's rising from this top, and there is one thing that I love to filter some things, is resistance number 3 after a divergence. In our case, there was a divergence here. That's first resistance zone. That's the second one, the one we are facing right now, and the third one, once again, is bringing us to 168. So according to the weekly chart, oops, sorry, the line was erased. According to the weekly chart, with its one-time false break here, the pair is moving up. Now pay attention how normally up moves are happening. Take a look. That was the first down move. Okay, that was the second down move. Almost reached the bottom. Almost. It was very close. But that was from this top to this bottom. It's pretty much the same size wave. Not exactly, but pretty much the same. And from this top to this bottom, again, almost the same. We can of course change the angle a bit like this, and then it will be pretty equal. Okay, take a look what I'm talking about. Here, you see, from this top to this bottom, and again from this top to this bottom. Again, they're almost equal. Of course, we cannot make lines equal to the pip and to the same candle on weekly chart and on monthly chart. It's impossible. But that's the idea. That's how the down moves are moving. And what happening was from the upside. That was the only up we got since then. Okay? And it means that it could take something that length. Okay, it means that could happen. This rise could happen on the end of this year and the beginning of the next year. Now there is another thing to remember, and I'll show you that. Pound has one interesting fact. Pound knows to create tops on the beginning of the year, calendar year. What I'm talking about, let me show you for a second. That's the pound dollar. Let's take it back to January, for example. Just want to show you some interesting fact. Maybe you already heard me talking about that, so I'm sorry if you did, but I assume that some of you did not, and it's important to me to show. Okay, that's all. Okay, let's take a look. These years I can go back and back and back, but that's to share the idea. Take a look what is happening on January, at the beginning of the year. It could be January, it could be February, it could be sometimes even March. But that's the idea. Pound knows to create some tops on the beginning of the year. This year it created the top, and now it's reaching the top again. Normally, pound creates a level where it's not retesting again until the end of the year at least. Okay, take a look. It happened the same on 2012. It created a bottom, went all the way up, then only at the second half of the year it came to retest it, but finished on the top again. Here, 2011 created a bottom, moved all the way up, and came to retest it on the end of the year once again. Then 2010, same story, created a top here. That was the top. Okay, the beginning of January. See, a top on this place, and since then only dropping down, came back close to the end of the year to retest this level. Such thing is pretty cool, and that's where we are now on the pound dollar. What it means, the pound is retesting here, and most likely it will not go above the high of January this year. That's according to the history, of course. So from my point of view, this top is a top, and here the pound dollar will find some range, which I believe is going to be between 163 down to 157, maybe bit lower to 155. That's from my point of view the range where the pound will be trading, and that's what we could use for our needs. Okay. According to the, now let's take it even one lower time frame. This is a daily chart, and we had a bearish divergence here, right? So from my point of view, you see that how strong the stochastic is pushing down, how strong the MACD is pushing down. So from my point of view, personally, I think that the pound could create here some flag or some pullback to 160, 150 again, and then most likely will continue to the downside again. I do think that the pound will retest the open gap it had around below 159 again, and that's why for the short term I think the most correct way to trade the pound dollar will be to the downside, find sell opportunities, and once it's reaching the range in between the gap down to 157, and as I said, maybe 155, I'm doubtful, but maybe 155, on this range we should be looking for buy opportunities. And guess what, if it comes a bit lower as I expect it to go, between these two lows we will get a bullish hidden divergence on a daily chart. That could be pretty cool, pretty interesting, and from here it could stop and start to take the pound dollar up again. As I said, I do not believe the pound can break the 163 this year. Maybe it can spike, but definitely not hold above. This is my opinion, again according to the history as I just showed you, and that's why I believe as long as it did not reach the bottom, we should be looking to sell the pound on the short terms, and from this zone we could start to find buy opportunities. Right, that's my view about the pound dollar, and well, I hope I explained it pretty from all the angles. If you have any questions regards the pound dollar only, please ask now. And again, let's avoid questions like what do you think is going to happen today or this week, okay? That's not the idea. Any other view you have regards this pair? Anything else you want to show or to ask? Okay, wonderful. If everything is clear, let's continue. The next pair will be the euro dollar. The euro dollar is interesting, not less, for long run. But first, fundamentally, what's going around there? The euro dollar is a bit confusing. The eurozone shows from one side some recovery, right? But then it's stepping back. They show some employment recovery in Spain, in Italy, in other countries as well, and then it stepped back. And I personally think that there are too many hidden things behind the European economy. I think that we don't know the whole truth. There are countries like Slovenia, like Croatia, which lately joined the Eurozone. And even the big countries, okay, like Greece and like Cyprus, of course, when I say big, I mean big enough to the previous I mentioned. And even bigger like Portugal, Italy, even French, they all, on some way, are still suffering. Their real numbers are not good. And that's why on the last speech, Draghi has been talking, and he said that he is ready to do all it takes to recover the eurozone. There's one thing is clear behind such saying: they are not ready to give up on the eurozone. They fought so long to create a eurozone; they are not ready to give up about that. Okay, so what it means to us as traders, it means that they will not allow the euro dollar or the euro as a currency to gain strength against the other currencies. Why? Because strong euro, okay, just think about it. How many countries already took loans, and how many countries already have debts to other countries like Germany? Okay, many countries. As long as we're moving forward, more and more countries will need such this money, okay, these loans, and they will have to pay back. And if they loan when the euro dollar was 128 on 130, and they have to pay back when it's 136, where will they take this money from? Okay, we're not talking here about $1,000. We're talking here billions. Okay, and that's why my point of view fundamentally is there is no real reason why the eurozone will accept the their own currency to be that strong. Of course, there is also always a possibility that the market forces will be stronger than any bank forces. I don't think it's correct to our reality, especially not 2013, which is completely different year compared to other years we have had in the forex market. I still don't think such thing could happen, and that's why I believe every rise on the euro dollar is an opportunity to sell. Let's start from the monthly chart. Monthly chart, what it has for us, nothing special. It has some trend line going all the way from here, right? It has several resistances on the way. It has one on this zone. It has one bit higher, which we got on the 92, and then was retested on 2010 again. It has bit higher around 143, but we see that this up move is most likely limited. Where these signals come from? Okay, and that's according to the monthly chart. More than that, personally, I don't see anything. It looked like back in history, it looked like this could be a potential head and shoulders. It turned to be like a sideways range right now. And that's why I think the up move on the euro dollar is limited. There is another thing to pay attention to, and that's this fact. We could still go to duplication of this wave. The euro dollar likes to move in duplications, especially on the upside. Simply likes to do that, and you can see that even here, after this drop down, it did the same to the upside. When it goes down, it likes to drop, but when it goes up on the monthly chart, it goes to go by waves. Same it did here. That was the first fly to the upside. Then it did this. Okay, even bit more. But every time it's going up, it likes to do that by, you see, by waves again. Okay. Then another one, of course, here, which was a bit longer, but that's the idea. The idea is the same, and that's why theoretically there is a bit more technically watching on the monthly chart that where is the line here, that the euro dollar can go up to. Watching on a weekly chart, what do we have? Still nothing. RSI is still good. MACD is still good. Definitely can push it a bit higher for another level, right? Watching on a daily chart, what do we have? What we start to have? On daily chart, there are several interesting things. That's why I am zooming in. We have a bearish divergence from one side, right? And we got a pretty impressive equal tails engulfing. If you don't know what equal tails is, friends, you can go to the blog. It's VladimirRibakov.com. Go to free download and download the books about the candlesticks. It's free. And there I explain what equal tails is. Equal tails, from my point of view, is one of the most powerful candle patterns exist, especially when it comes with divergences and tops. To make a long story short, it does not have to be, like 10 pips tail from the bottom, 10 pips from the top. Okay, it can be 10, 12. On daily chart, it's not what important. Visually, if it looks the same, it's good and fair enough. Last time it happened was here. You see the mouse? Here. And that's what happened after that. We got a pretty impressive drop to the downside. Then it happened here. We got another drop down. It happened earlier here, but this one failed. It did not create nothing. And last time it happened before, that was right here on this zone. And again, we got a pretty impressive move. Now it's happening again. Every time on the last period, when it happened after a real up move with a divergence, every time it happened, a move came. Even when it failed, it pushed a bit higher, but then a down move came. So, I think that the current rise on the euro dollar is limited, and we should be looking for sell opportunities there. There is one thing to remember: the euro dollar, like a week or two ago, created a gap and it still never closed it. Euro dollar is one of these pairs that likes to close gaps as soon as possible. There are pairs like crosses in Australia or some exotic crosses. They close gaps, but after a long time. They don't care about it too much. Euro dollar is normally, a pair that likes to close the gaps as soon as possible. And that's why I believe every rally on the euro dollar should create for us an opportunity to sell, and I do think we are going to close the gap. And I do think that the current up move is limited, especially if we remember that there is a something like that pattern, okay, still making the euro dollar rise. So this up move is limited. It can be inside the gap and then drop down. It can be bit higher and then continue with the divergence and make the drop down. Every rally, if it's on the short term or if it's on mid-term to create another high, from my point of view, is opportunity to sell. And fundamentally, euro dollar only should be sold. After this drop down and the gap, according to the monthly chart which I showed you before, the euro dollar might still find some temporary bottom and create another push to the upside to the levels we've been talking about on the monthly chart, duplications. Okay. So that's my full view about the euro dollar, and as long as we are still above the 200 moving average, and as long as we are still above this monster support zone 131 132, my opinion is for the mid long term is still bullish, but for the short term, like several weeks only, I think we should be better looking for selling rallies, as the euro cannot stay too strong right now. And maybe for us 136 and 137 is the same. For the eurozone and the debt they have to pay, it's definitely not the same. And 136, 137, or 134, 133, it has a lot of meanings to all countries that have to pay back the money they took. Questions about the euro dollar? Well, I'm sorry for my voice if I sound a bit. I'm a bit cold, so I'm sorry if I sound a bit weird. Yes, it is, Edwin. Of course, of course. It's not. It's not. Well, it's not a webinar. It's just a live meeting. What I wanted, as I said, I believe there are many opportunities forming, and I want to cover them because I think the market is taking us to very interesting levels. That's why I wanted to create this event. So I don't have to. Oops. So I don't have to repeat myself again and again. Just want to straight line with everyone. All right. The next pair is, I guess, many of the visitors here are interested about the yens, right? Well, the yens are very, very unique this year. And before I go there, I'll just to answer Tommy. It's been tested a few times. Do you think? Yes, I do think, Tommy, that the euro dollar will be 128 again. I do not think it's going to happen on the very near future. I believe it will take some while. I might be wrong, and that's why I said as long as we are above the 131, 132 zone, I still believe, at least according to the technical things, not to the fundamental things, according to the technical things I see on the chart, based on the monthly and weekly chart, there is still a room for bulls to have the euro dollar on their side. But I definitely think euro will be below 130 on longer future again. Yes, definitely. As long as the pressure on their economy holds, I think so. Okay. The yen pairs. Well, on 2013, the Bank of Japan intervened aggressively. It caused the yen pairs to devalue something like 20 or more %. Well, I admit, even if after they intervene, I never thought it's going to be that deep and the market will react that dramatically. I still think the market reacted over dramatically. My view about that did not change. And I still think that the yen pairs, and when I say pairs, I mean the dollar yen and the euro yen, the pound yen, the Swiss yen, and all other yens, still have more to go to the downside whenever the market is ready for that. But that could take an year, that could take 2 years. I have no idea, no one does. What is my view about it is something like that. After the intervention, by the way, the Bank of Japan is trying to put some new tools into the fight against the economy weakness and the big depression they went through. It does not work that much, and does not work well to the Japanese economy. And we can see that every time after the speech, the dollar yen and the other yen pairs somehow not too much impressed by that. So let's start from the monthly chart. According to the monthly chart, there are two controversials, and the first one, by the way, I'm sorry if I'm making mistakes on English, if it's grammar or anything else. Please forgive me. We are here not for English lesson. We are here to talk Forex. If I do mistakes, that's simply because I'm Russian and my English is not my mother language. So beg your pardon if it is bothering someone or feels wrong into your ears. Sorry. From one side, the euro dollar, the dollar yen, sorry, has on a monthly chart a bearish hidden divergence, as we can see here. Such thing can tell us, hey, the pair is ready to drop down at least to the previous lows. Okay, technically. But from the other side, let's take a look on the bigger picture. We had a drop down, and after this drop down, we got a bullish continued divergence, all this range. Of course, we got a wedge, okay, which created a beautiful break, and now is reaching its top. After such divergences, as I've mentioned before on this meeting today, pairs love to go to resistance number 3. That's what I call secret number 3 after divergence. And we got a very interesting first resistance zone. We get a very interesting second zone, all this range. And there is a third zone starting from here and from my point of view lasting all the way to this zone. On monthly chart, it's not one line. On monthly chart, it's a zone. And from my point of view, for the dollar yen, 102, 103 up to 108, 9, that's the top zone. And that's why we see the pair has some difficulties around this level. Now, moreover that, and we can see that after the push to the upside, the dollar yen created for the first time a bullish convergence. Bullish convergence means simply look for buy opportunities. And that's why, from my point of view, the current cycle, that's by the way, that's the exact topic I am talking about on the book Sell the Rally by the Valley, right? That you have read. And that's the bullish convergence I am talking about. And that's why I think we should be looking to buy values. From my point of view, the dollar yen could and should, I still think it should, reach once again 94 and hopefully someplace a range in between 90 to 92. That would be a very good levels to regain the bullish momentum from and cause a rise. If it does push to these levels, I think it will be creating a bottom there, and I think it will start to reverse from this zone again and taking us most likely to the last high again and maybe even to another high. Watching on a long-term view, we got wave number 1, we got wave number 2, which went flat for some time. We got wave number 3, which was a very big one. We got 4, which is going flat for some time. And I believe that neither from here or neither from the lower levels, which I hope and still think will be taken, we will see another push to the upside. But I also think on the same place that every push we will get from here or a bit lower, every push we will get will be limited and will be lost. Because I do think that right from this zone, after this push, we will create a monthly divergence. It's still early, so you just have to go and follow with my maybe crazy, but my imagination, my chart imagination. That's what I see happening down, up, creating a monthly divergence during 2014, maybe a bit longer. And right from there, starting its drop back to the 90s zone again. Okay. So to make long story short, I still think the dollar yen is able to gain more of the bearish pressure. I still think it can take us to duplication of this lens here. And that's the level where I think it can drop to, and I believe it's going to be a bottom and to create a very big up move. And my this view of mine is relevant as long as the dollar yen did not break above this trend line it has and above the very stiff resistance it has, the psychological 100. It tried to break 3 times, 1, 2, 3. Above, failed on every time to hold for a long run. It retraced from immediately. 100 is not that easy level as it looks. This is my view about the dollar yen, and of course I think it should affect directly on the other yen pairs, like euro yen and a pound yen. Now, taking a look on the monthly chart of them, there is same view exactly. there is a bearish hidden divergence, right? There are many resistances on the way. This is bend to bend move on the Bollingers on a monthly chart. You see that? Bend to bend. It simply goes straight from one bend to the other bend on a pretty wide range. And that means, from my point of view, that we are creating here at top somewhere in between this level up to this level. And I think it will, who is it calling me? And I think it will create a top here and start the drop down again. I think the current rise is limited for the euro yen, and the reason for that is, as I said, a bearish hidden divergence and the fact there are many resistances there, and the classical bend to bend move with half of the way more. Okay, so that's about the monthly chart. The up move should be limited, then we should take it back to the monthly 20 MA, maybe a bit lower. How is that? How can that be translated on the weekly chart? On the weekly chart, well, that's a long divergence there. We never got a real bearish cycle. We got small pullbacks, but it's not a cycle. And pairs make cycles always. There is a trend line that never was retested. It will be retested. Only question of time. So nothing is moving without cycles in life and not in trading. We know that. So how can that be translated on the trading? That's a weekly chart. It created, of course, after a long time, it is creating right now some wedge. If this wedge is broken to the downside, we are most likely going to the meeting point in between the first wave, the first spot from the top, and the second spot from the bottom inside the wedge. Which means it can take us down to 122, down to 120, maybe even lower. And if it's moving still inside the wedge and retracing up again, then remember the next limit, that's around 138, 140. That's the range of resistances on the weekly chart, as you can see. Right, that's why, again, I think that the current cycle is limited and we will see it drop lower. This drop most likely will begin with the breakdown below the wedge, or if it continues with the wedge to the upside for another spot, then with the next divergence with the next stop to create for divergence, like that, up, with the next stop for divergence to create, then long down all the way to the trend line and to the meeting of the wedge. Okay. Same, I believe, is about to happen with the pound yen, which is doing same divergence idea, and it has same line not being retested yet. It does not have a wedge, but it definitely shows bearish pressure as well. The cycle is about to begin right from here with the break of the weekly line, taking us to this zone again, or alternatively, according to the monthly chart, will create another push bit higher. We have very, very stiff resistances starting from 163, 164 up to 168, 170. There is a continuing divergence forming on the pound yen already, and from my point of view, every rally is, when I say rally, I don't mean 50 pips, I mean 200-300 pips at least. Every rally is an opportunity just to go for a sell, as I believe we are in front of a cycle. Of course, I'm not talking about a cycle that will happen starting from today up to the next week. No. Okay, I believe it's going to take at least a quarter, most likely longer. And remember, the big picture always help us to know how to deal with the short-term opportunities, because the big picture always controls at the end of the day the short-term opportunities, the short-term trading. That's my, I'm sorry it takes long, but that's my view about the yen pairs. Any question about the yens? If you have anything, please do it now. Hans, I will go over the gold very soon. It's on my chart. Any question, friends, about the Japanese? All right, it's as I said, if it's clear, it makes me happy. Okay, the next. Let me check my list here. Okay, I still have a few more about the Forex pairs, and that's Australian. Okay, Australian pairs. When I say Australian pairs, I simply mean the two majors against it. That's the most relevant. Euro Aussie and vice versa is the Aussie franc. I will not cover both. I will take only about one. It's exactly the same, just opposite for the second. And the pound Aussie. Now, this pair, and I admit, surprised me, because there was no massive intervention in Australia like it was in Japan or other countries, and still Euro Aussie made an up move much stronger than I expected. I personally, I didn't think it will go over 142, 145 zone. It did. But now it's moving inside a cycle, and the thing is that I think that this cycle down is limited, mainly because we have a bullish convergence, and that's pretty clear sign from the market that it wants to push higher. That's the bullish convergence I'm talking about, and we should be looking for buying opportunities. Hi Andre, and welcome to this event. So according to the monthly chart, we still have more to go, and you remember my resistance number 3 rule from the bottom. After a bullish divergence on monthly chart, we got a beautiful two lows here. Resistance number 1, resistance number 2, range 1 from here to here, that's the zone, and resistance number 3 from my point of view is inside this zone. That makes me believe that the Euro Aussie, after creating this bottom, will take us up to this zone again, reaching the somewhere in between 155, maybe 154, up to 162. That's a big range, but that's where I believe it is aiming according to the monthly chart. I also believe it's going to be 5 waves move. We got wave number 1, 2, 3. Most likely we are now in 4, which should end within a few months. And I believe from here we will see another push up, which will be wave number 5. Right there, I believe it will stop, create for us a bearish divergence on a monthly chart, and start taking the pair back to its natural zone, and its natural zone from my point of view will follow this trend line, meeting with this range of support. Sorry, not here, here. That's what I believe is about to happen. Down, up, down again, 140 up to 145. That is the natural zone for the Euro Australian according to the new reality. Okay, so that's for long run. For the short run, we can go for a weekly chart. On weekly chart, we had a divergence, the pair creating a small cycle down. This cycle could last longer. This cycle could take us to this zone, and I think it still could and should do it here in between 139 down to 136. I think it's still able to do so. Then I believe it will create a stop. I believe it will create a bullish hidden divergence. And from this bottom, I believe we are going up all the way again. All that could be a bit different and I'm going to the daily chart to show you. On the daily chart, there is a double head, double shoulder pattern. Double shoulder, double head. We might go for double shoulder again. This could be from here, this could be from a bit higher when it closes the gap. There is a gap around 148.50, and I believe this gap could be closed. If from the current cycle or from the next cycle, this gap should be closed. It could be like this, and then the head and shoulders will be doubled on all of that with bigger view. But as long as we are below the 148.50, which is the gap close, my view is that we are still on a bearish cycle and the rise up is limited. I believe this cycle will take us back to, as I said, 139 down to 136. I do think from here it's going to make a stop and create a buy opportunity again. That's my view about the Euro Australian, and Pound Australian I think should follow that. It has a 20 candles ride without on the upper band on the weekly chart without testing the 20 MA. I think Pound Aussie is able to drop down to 164, down to 159 zone once again. Then I believe, according to the monthly chart once again, that we will push higher, and I think the Pound Aussie or the next year or so will be, maybe not 2014, maybe more, but will be again above 190. I think it's only a question of time, and it's about to happen. The question is how long it takes and how the cycle will move. From my point of view, we got first small cycle, we got small 2. We are now creating cycle number 3. After the correction, we'll see another cycle to the upside. That's why every drop down and deeper drop down on weekly chart, not range, deeper drop down is an opportunity to buy from my point of view. Okay, and my last interesting thing about the Australians is Aussie against the Kiwi. I will not go too deep into that. I'll just show you this harmonical pattern on the weekly chart. I'll just tell you that from the options trading world, there are too many puts being sold below 113, 112 and 110, and that's why I believe Aussie against the Kiwi, against the New Zealandian, is creating a bottom, and I think this bottom can be everywhere inside this range, and right from here, and that's weekly chart. Yeah, so that's going to take a while. The pair will find the way to rise all the way above 120 again. From my point of view, look only for buy opportunities. For that to happen, New Zealandian dollar has to drop down, and I think the New Zealand dollar is about to drop down. It starts from the monthly chart that still has its bearish pressure. Every rally on the New Zealandian will put another high on a monthly divergence and will rebuild the bearish pressure. There is no fundamental reason, especially not with the current house markets in New Zealand, for the currency to be too strong. The bank will intervene, even though that they were the first to say they consider to raise the interest rate. Even with that, I think there is no real reason, and it simply will affect the New Zealand economy. There is no real reason New Zealandian dollar will be too strong, and I think New Zealand dollar, every rise every up move is an opportunity to sell. Watching on a daily chart, there is still a gap to close. You see that gap? Okay? It means that every rise is opportunity to sell. This gap should be closed. And I will not be surprised if the New Zealand dollar will drop all the way to the previous bottom around 0.78 again, even if it's directly. I don't believe in this currency. I know many traders will not agree with me, but personally, I don't believe in this currency. There is no real reason, especially on their own economy. I'm not a big specialist in the Pacific's economies, but from what I read, from the reports I see, from the long-term options trading I see, from what I talk to some traders, there is no real reason again for a strong New Zealand dollar, and that's despite all the signals and signs that the government and the central bank send. The market there will make it clear. Every rise is an opportunity to sell, and that's what I believe will cause all the New Zealand pairs to rise. If it's Australian New Zealandian, if it's Euro New Zealandian, I'm not going to explain it too long, but that's the idea. Okay, according to the monthly chart, Euro New Zealandian has much more to go, and it will. Only question of time. Same as a Pound New Zealandian, which I believe at the end of the day it will be again above 220. And it does not mean it cannot create another low. It could. But 220 at least, probably 240 within 1-2 years. And that's why I think every pair against the New Zealandian is a good place to trade against the New Zealandian. Okay? That's my view. I might be wrong. That's my view, and that's what I personally do. I trade against the New Zealandian every chance I have. Of course, I'm not trading the 3 years or 4 years lens, but definitely the daily charts, great opportunities for me. Now going to a bit of commodities, if you don't mind, and few words about the indices. Okay, just to finish the Forex, I think that's my best opportunities. There are pairs like the Canadian, there are pairs like the other crosses like Pound Franc and Euro. I don't cover them simply because I'm not quite convinced what and how should be done on the very long term. I definitely think that the Australian and the New Zealand pairs are interesting and we should go against them, but not crosses like with the Canadian. I simply don't know. Gold and silver. Well, I've been asked about that a lot during the last weeks, and I'll share with you. It's my pleasure. It's my pleasure, and I'm going to share with you my kind of wet dream about the gold. That's a monthly chart. What you see here, it's a bullish hidden divergence already, but because of the extreme we reached on the monthly chart. If you remember, some while ago, on the period I used to share the weekly forecasts on the blog opened, I was very short on the gold when it reached the highs. And I told you that it's only question of time the gold will be again here. This time reached. This time is here now. And now I tell you, gold is an amazing buy opportunity to buy and hold. I know I'm not the only one talking about that. I know everyone is saying buy gold, buy gold, buy gold. It might be a bit early, but I definitely think it's an amazing opportunity. Take a look. This is a bullish hidden divergence, but because of the bearish divergence we got before, I think we are going to complete 5 waves. We got wave number 1, that's wave number 2, that's 3. Now we're on 4. I believe we are in front of 5 that will finish this drop down. There is a trend line on a monthly chart which I believe is going to hold. There are several supports which I believe are going to hold. Dropping to the weekly chart, that's the full picture of my dream. That's a 20 candles ride and a first push up. I want it. I cannot guarantee it's going to happen. I want the gold push lower again to a classical double bottom with a beautiful divergence to form. It might be too obvious here, and that's why I think this double bottom could be not straight but with some angle down. And I think that's what could happen here. A drop down to this range, creating a monthly continuing divergence and a weekly continuing divergence combination. And right from here, once we get another low, once we get the new tick to the upside on the MACD histogram and a clear candle pattern on the gold weekly chart, that's where I believe will be perfect time to jump in and simply hold. That could be one-time opportunity. So that's what I want to happen, that's what I expect to happen. And could it be different? Of course. It could create for us a flag now and then break down. It could create for us a triangle now, which will be classical, something like that. Something like that, moving inside, then break down and then retrace. But the idea was and stayed the same. The picture will complete itself on this cycle in this zone and then fly. Personally, I already have gold and I plan to hold it, and I plan to buy more if it really goes to the levels I want and I expect. But my view is extremely bullish for the long run here, especially when we are dealing with such amazing monthly potential bullish hidden divergence, bullish continuing divergence to form, and weekly divergences. That's really, really rare, and that's why I am so excited about that. The alternative will be a break above the weekly trend line. Here you go. That will be the kind of alternative for the gold rise if it's not following the scenario to buy from the bottoms as I showed. Silver should follow the gold, so I will not elaborate too much about that. The idea is the same. If it drops, it's going to create a double bottom or bit lower. It's simply amazing opportunities once again. Bullish hidden divergence could complete 5 waves. Another push down will create a continuing divergence. Classical bottom just to make a fly. That's, by the way, the trend line that never been retested, and I hope it will be on this cycle, and then I expect silver to go all the way, most likely to create new highs on the future. My quick view about another commodity I believe is worth to invest, and that's corn. Beautiful trend line on the monthly chart, beautiful bullish hidden divergence on the monthly chart, beautiful bend to bend move, beautiful bullish divergence forming on the weekly chart, RSI dancing around extreme. From my point of view, and there is a trend line that never been tested after this drop here. From my point of view, corn is creating a bottom in between the current support through any of the next supports. Wherever we get a clear bullish candle pattern and MACD creating another high and changing another low, and changing its slope to the upside again, it is time to jump in and to hold. I believe corn is creating a bottom to go all the way to the trend line again. That's opportunity for over 100 points for a long run. It's worth it. Just one thing to remind you, for those of you who trade commodities on brokers, MT4 brokers, remember that contracts end every 17th, 18th, 19th, depends on the contract, depends on the broker, and some of them continue the contract automatically. You just pay the difference. Pay attention to that, okay? If you about to trade it. Now I've been asked about the oil, and I don't have a clear view, but I think the oil is creating a bottom. This bottom could be 102. This bottom could be 99, 97 even. Follow a potential bullish hidden divergence on a weekly chart here. And follow this, if it drops down here, this continuing divergence on a daily chart. I believe this zone is going to be a bottom, and gold is and the oil is about to fly again. And few words about the commodities. You know my view. It's not a secret. I was and I'm still very bearish about the indices. I don't believe they have any reason to stay as expensive as they are. The current shutdown in USA does not help, definitely. The fact that on 17th of October their ceiling, their debt ceiling is about to end, I think as long as the fundamental pressure is bearish as it is, look to sell. And I think for the longer view, that's a wedge we have on a weekly chart, kind of expanding wedge. And I think this is a top, and I think we are slowly but truly are moving to the bottom again, which is here. That's Dow Jones. It's the same on S&P and everywhere else. There is a trend line and there is a top line. The idea is the same. I am very bearish, and every rally, every high or every rally is an opportunity to go for a sell. For long run, I believe we're going down, especially if we remember the bearish monthly divergence. After on such continuing divergence, on such rise, every rally, every high is fake. Don't believe it. Okay? Despite of I know that many are saying that indices are going straight to 20-30% up from here. I don't have any reasons to believe it's not, but I believe the monthly charts, and I believe the weekly charts, and I believe such divergences. Every high, every rally, every attempt to show a pink picture is fake. Such highs, such divergences are always corrected. And why I think this one will be deeper? Because every time we got, take a look on the Dow Jones again, every time we got 20 candles right on weekly chart, we got corrections. This was the first one, the smaller one. That was the second one, the bigger one. You see, after 20 candles right. Now is the third time. That's why I believe this will be the deepest one on these cycles. I believe it's going to take all the indices together with it. US economy could affect every other country as well. And that's what I also think could cause the dollar yen and the other yen pairs to make the cycle down, as they are too much related to the dollar yen and the Nikkei as well. Now, your turn, friends. I shared with you all the things I wanted to share with you. The main two from my point of view are the pound dollar and the gold. When I say pound dollar, also the euro dollar, and I say gold, it's also a silver. Australian pairs are amazing opportunities from my point of view as well. And indices, well, I am in, and I'm in to stay. Anything you have on your list, something I did not cover, or something you want especially to check or to see? I've been asked about short-term opportunities, friends. That's not the event for that. For the short-term opportunities, that's where exactly I have the market's forecast. Yes, it's on a monthly payment, yeah, but yes, I try to keep it as low as possible. There we cover all the short-term opportunities every day and every week, weekly forecast and daily forecast. This event is not for that. If you want everyday review, then you have to be a member for the markets forecasts. Such events are not for the short term. Sorry. What is my view about coffee? Let's take a look on the coffee. Coffee. Let me find it. Here. I'll show the chart, and I will shut up for a second. Igor, by the way, if you are here, you can see your indicator is here. Proudly, I'm using it always. Coffee is making a classical buy opportunity, and I have contracts for coffee. I'm buying that. This is a monthly chart. This is a monster divergence. I do think it's able to take us down to 110, maybe below 100 again. Such opportunities are rare. Coffee for a long run, like during 2014, 2015, is about to fly. We have a monster divergence monthly and weekly. It's about to fly. Coffee and sugar. Okay, they both are doing pretty much same. Sugar already, by the way, started the move. Okay. Coffee still did not. Sugar already started the move. Well, we don't have the milk to trade as well, but I think coffee is a buy and hold, and it doesn't mean it cannot drop to 110 or below 100. Yes, it could, but on such divergences, on monthly and weekly combinations, I would only buy and increase the lower we go. I believe commodities will start their move as well very, very soon. All right, friend, thank you very much for finding the time to be here. It was very important to me to put this review and make the line straight for all the followers that are interested in my views. That's what I'm going to do for myself. That's what I'm going to do for the club. That's the trades where I'm going to concentrate. That's the directions I'm going to analyze every single day on the markets, to the markets forecasts members. And it was very important to give the general picture for me, because we don't have the chance to meet too often, and once a while, when the market brings us to such places, I do want to hold such events. Anup, you can find my books about the candle patterns. Start with that. It will help you a lot. Okay? That's all, friends. Thank you very much again for being here and for finding the time. I really appreciate it, and I hope you find it useful and you enjoy it at least as I did. And I wish you wonderful trading and wonderful week and wonderful months. Thank you. Goodbye.